everyone. Welcome to BFSI.com. My name is Amol Dete and you're watching Fintech Diary. In today's chapter, I have with me Madhusudanan, the co-founder of M2P Fintech. Madhu, glad to have you.
Thank you, Amol. Thank you. Looking forward to having the conversation with you today.
Thank you. So I have lots of questions, but to begin with, if I look at the data of last 3 to 5 years, specifically how much funds fintechs have raised, you have raised significant or must say a notable amount in 2024. But overall, the fintech funding has been declined. So, so how is it going now with those, funds that you have raised? What are your expansion plans? And more importantly, is the money over or is still there?
No, in the current environment, I think we have to save every dollar. So we cannot afford to use it all up. I think the whole, narrative around, global slowdown on funding and all of that, I would say it is more law of averages catching up. We overdid that in 2020 and 21, 22. Now it is kind of settling. So somewhere along the way, we will find that rhythm and the balance. But what has changed substantially, because we also as a business work with a lot of very early stage companies. So we were in some form, we are like a index of fintech action. We don't invest, but we do work with a lot of fintechs in India. The velocity with which new ideas were getting born in India has significantly gone down. Right? So we talk about the funding side on one aspect, because funding has different levels, companies' maturity, the business model, everything has a global macro impact as well as a micro on how that company is doing, etc. Right? But if the top of the funnel action slows down, which is the number of companies that are ideas that are getting born, then you will only have so many that will come through the funnel, which is actually the worrying part. And if you really look through it, there are like one or two reasons that I would attribute. One is a lot of the operators, as they call, people who have experience, who wanted to test entrepreneurship for the first time. In the world of easy money, they didn't mind jumping in and figuring out if something will work or not. Today, those people have really pulled back, saying, let me not take that chance because the cash is hard to come by. Right? I don't want to dip into that. The other is there's also this aspect of whatever worked in the West will probably, like, you can take one idea that has worked in the in the US or UK or somewhere in Europe and maybe localize it to India. That time and age has gone, right? Like in a lot of fintech opportunities, India is so far ahead. The arbitrage is not there. You cannot make anything better than what UPI is already there on payments, right? So, right? So therefore, the need is business model reorientation has to happen, whereby you have to say payments mein paisa nahi banega. What is the second order effect of payments, right? Which is why the other reason is.
No, I think to begin with, I think that was a good point to begin with. But let me start from the first to understand M2P. Please introduce your dashboard to us. How many people work with you? I remember this is your 10th year, right?
That's right. We just completed 10th year.
Yeah, exactly. So, what has changed for you? How many people work with you? And more importantly, which is a $1 billion question for the fintechs, are you profitable?
Absolutely, more than $1 billion. So we started almost 10 years back, Amol, and what we started as an idea. So my co-founder and I were colleagues at Visa back then and even now. The idea of fintech continues to be true, right? That you can use technology to actually deliver financial services in a meaningful way. And it is even more pronounced now because the ecosystem has got ready for it, right? When I say that, 10 years back, we didn't have the kind of mobile data that we have today, right? 10 years back, if I told somebody on the street here, outside your office, that he will be watching a cricket match on his phone, he may not have a roof over his shoulder, people will laugh at us, but that is the reality, right? So a lot of the macro factors that have that goes into providing access to finance have actually gone in the right direction in India. Access to mobile, access to identity, some of those capabilities, broader digitalization.
The whole infrastructure and ecosystem got ready.
So therefore we feel that we got in at the right time to be primed into a company which then can work with a number of players who are, who can actually make significant change. As a business, we today it's fashionable to call it as banking as a service. When we started, there was no API, there was no fintech. Therefore, we didn't get capital. For the first 5 years, we were bootstrapped as a company. that really set the tone and the DNA of the organization to be really frugal. How do you make sure that we survive this month and go into the next month and deliver capabilities? And very early we also realized that the role that we play was sort of helping the banks to offer their capabilities better, which meant that a lot of trust were handed out to us by bank. Whether there was a overarching regulation that provided it or not is a different matter. But the mere fact that banks trusted us to give, let us run that business,
Right.
we took it very, very seriously in terms of how it should be run. So making sure that the processes and the control that we had, so that has put us in good stead in terms of the partnership. Over time, we've been able to work with some of the best banks in the country. Today we are about 1,300 people spread over and about 12, 13 nationalities. We are an international company in that sense. We have offices. We work in about 30 markets. We started our international foray about 3 or 4 years ago, and we do have offices in the Middle East. We have 3-4 offices in Southeast Asia. We have offices. We have recently opened in the US. So our mission right now is to make India the fintech factory for the world, which is what I told the Prime Minister when I got a chance to meet him in GFF last year.
Yes. We saw you there. But on the profitability part, how much money are you making?
So we are testing profitability. Okay. So one quarter we make. So a business is cyclical in the sense that at the beginning of the financial year, banks have bigger budgets to sort of deploy capital to make new product, new capabilities and all that. So we are just at that moment, like last 2 quarters of the last financial year, we actually made money. And then we ramped up our team. We are also balancing that profitability with growth. So we'll always be in that about 10% EBITDA sort of profitable sort of margin. That's what the mandate from our board is to not compromise on the growth for profitability, because we still have a long way to grow as an organization.
Right. So when you spoke about, the people have the access today, which perhaps earlier was not there. I think James Cameron, the cinematographer, the filmmaker who made this movie called Avatar, said something very nice. When he made that movie called Avatar, everyone asked, where did you get this technology from? He says, and the story from. He says, look, I was having this story even 10 years back or 15 years back, but I didn't make it then because the technology was not available there. And I made it then only because of the technology was there, right? So similarly, but one interesting question I have is, when I was going through your website, I realized that you started with a conversation over a chai. I understand you come from the south. Why not over a coffee?
No, so we 2 co-founders are based in Bombay. Tapri ka chai was the only option that we had.
That's how you started.
Yes.
But one important question along with this I have is it because of you reached to the level where you are today because of, for the first 5 years, you bootstrapped, you put your own skin, your own money, and that's why the credibility was more high than the other fintechs who first bought the money from the investors and then developed the products? Is it why you worked? Did it work for you?
Not just us, right? There are countless millions of businesses in India that are built that way. You borrow from family, or somebody in the family helps you. You then build it brick by brick. I think what changed for us after we got the funding, and since we have run 5 years as a funded company and 5 years as a bootstrap, I can now talk both sides, both the good and the bad, right? Like we traded the freedom of being an independent company for some cash. Some days I wake up and say, if we had a difficult conversation with some investor, I should have just remained bootstrapped, right? The point is, I think for founders to really know, when you are actually having investor capital, it's a lot more responsibility that you take on, because every penny that you spend, it is almost like borrowed cash. So when let's say you are, flying somewhere in your personal holiday, whether you fly economy or business, nobody cares because it's your own money.
Yes.
But when you're coming on the work side, you cannot just tell your company that, I'm flying business because I like to fly business. Right? There are policies, controls, then there are strictures around who can do what. Similarly, with investor capital also, even if the strictures are not visible, it is incumbent on the founders to really make sure that they sweat every dollar that, that they raise. Right? Because we were bootstrapped, it allowed us to actually, use the capital very, very wisely. So we never leverage the capital for keeping the lights on, doing business. So if, for example, we went through a series of acquisitions that we made, which is what the capital allowed us to do. Because then we could experiment a few ideas. And by, I tell this to a lot of founders who come to us seeking advice or, for angel investment and all that. You should think of this like what the Romans did, right? So the Romans will land harbor, they'll burn the ship down.
Yes.
Okay, so that they have no way to go back. The only way to succeed is to, win the town or, the port. Similar, so is the case with, investor capital, right? You have to make sure that every dollar that is coming in, treat it as with a lot more responsibility than your own cash. Is the general sort of advice. But I think we have been fortunate in terms of, we got we were at the right place at the right time. We were just about just before demonetization we started. Yes. So demonetization gave us that escape velocity. That's how I put it. We still have a long way to go. Also, we're not in our consideration. We are still
absolutely, and that ambitious has to be there. That should be there. Okay, so moving your focus now from specifically on the products and the businesses, you're operating in many segments, right? It's payments, it's lending. Which one of the product or which segment is actually making more money for you or getting more famous for you? Where is the more attraction today?
So I think what we learned in the first 5 years of running the business was two macros played out very clearly, right? One was, if you remember 2018-19, UPI started scaling, very, very fast.
Yes.
And then it actually started showing how poorly banks' infrastructure were run, where, every day our Google Pay will fail, or Phone Pay will fail, our RBI, actually, kind of penalized a few banks and things like that. They put stricter, basically guidelines out to make sure that they get the act together and things like that. So, there was no design thinking flaw in the way banks were running it. What transpired in India in between 2017-18 to 2020 was banking moved from a 9-to-5 business to an internet scale business.
Yes.
Right?
Yes.
Swiggy, launches a campaign in an IPL game night. The bank CDO will lose his sleep because his servers are crashing, right? Never ever heard, right? Because banks are very methodical in the way they approach things, right? They plan for, even if they want to run a campaign, it goes through 15 approvals so that the customer doesn't have a bad experience and all that. Suddenly, they were actually woken up and said, there is a different world order that we are getting into, right? So that secular shift meant that every piece of technology had to be relooked at, right? Which was a mega trend that we noticed, and we started building. So all of our acquisition are aimed at how do we bring tech stacks together, right? That was one big, change. The other change that happened was that because in the first few years of that regulatory change, people felt that banks will have an upper hand. It was almost positioned like bank versus fintech. But the way it played out in the last few years is that fintech's working more closely with the bank.
The
collaboration aspect of it, right? I think we saw that coming, in a more meaningful way. So we actually started productizing some of the fintech ideas. Let's say if a neobanking is working well, how do you get a bank to become a neobank? Which is what we did with, IndusInd Bank, for example. They have this product called Indie, which is as good as any neobank that is there in the market, because the bank said, I want to put out a new proposition targeted at millennials. How do I make that happen? Right? We became that partner of choice to actually kind of get the whole proposition sort of built together. So therefore, that change allowed us to execute in the market more freely.
Sure. But if we now focus specifically on the current industry, a lot of fintechs have matured. Okay, in fact, you spent 10 years, and a lot of products have also matured. You're using advanced technologies. What will actually work for you? What is your learning out of 10 years, if you look at the background? Because payment is not making more money. Lending is also going through a lot of challenging phase, because LSP and TSPs will have a lot of partnerships with the banks and everything. So what is your sense? What will work for you? What will make more money for you? Because now the shift has been on towards sustainability and profitability.
So, as an organization, we actually are focused on, we believe that the new storefronts of distribution will become digital first, wherever you're buying your food, that will also become the place where you will buy financial services. It's only a matter of time before this transition happens where people start doing more and more. So therefore, as an organization, we are preparing ourselves to be the best platform at the intersection of consumer tech and financial services. So, we don't want to be boiling the ocean and getting 200 banks on our platform. But the most agile banks that are ready to partner with some of these organizations that are serving digital native customers, that is where we believe our sweet spot is, because there the question is not so much about financial services. It's a question of how much technology that you can bring in.
Right.
So if you overlay this with what's happening on the world around AI, where the US is actually now again leading in terms of how much of innovation that's happening there, you will find that you will have no choice but to adapt. I just recently tweeted about this. Somebody asked this, that every company will survive long enough to become an AI company, right? Which is it's inevitable that those organizations have to adopt. So therefore, we believe that if we are playing at the intersection of consumer tech and financial services, those are the places where AI disruption will be very, very pronounced. So we're putting a lot of effort into making sure that we are ahead of the game on that particular playbook. We don't have enough, mature talent in India. So we actually have put up a team in US to basically get insights around what's happening on ground there, and how do we actually relate that to India and build product and capabilities based on that in India.
Okay. Are you still developing new products? And what kind of products do you think will really work in the market? You obviously spoke on the business front in terms of internet platforms and all, but let's talk specifically about the products.
I think there is room for. So I'll break this into 2 or 3 parts, right? One is India is a very different mature market purely from financial services tech standpoint. I think we are the first world country. US is probably the third world country in terms of the maturity of tech. So you'll find Apple Pay in US, but the background is all people who are actually doing a lot of that work, right? So there's still a lot of heavy labor work that happens in banks and back offices and all that. So they will actually benefit out of the goodness of what is happening in India. Companies like us, and there are a lot of players who are basically saying, we've done well in India, how do I actually go out? And population scale in India is very different. So most of the markets in Middle East we have more people in Malad than what some of those countries have, right? So therefore, we are very focused on taking. So that I think is a big part of the problem solve. What has worked well? How do you actually replicate that success in other markets, right? And you have to localize it. So you might say that something that's worked. The beauty of financial services is that if you take credit card as a product, exactly the same product, whether in India, Indonesia, US, everywhere, you will only have to cater to some cultural regulatory nuances. So 80% is cookie cutter, 20% you've got to customize. So that is one big part of what we do. The other is, because we are at that intersection of consumer tech and financial services, there's a lot of changes that are coming from the ground. In terms of how, let's say, very basic example, if you're on Amazon or Flipkart, let's say you're buying a smartphone, you will find that, you get an offer by the site saying this you can buy at 6 EMI, right? Now, you are being communicated that this is a 6 EMI product, but you're not yet told who is the lender, what is the offer and things like that, right? Or they don't even know if you already have, let's say, a State Bank of India, credit card, how does that, what does that mean for that and things like that. So in the way the world is moving is that a lot of that orchestration will start happening behind. Amol will be surfaced with saying, on Bank A, this is the offer that you have. On your Bank B, it is not generic. Right? It is very specific to you. So I think directionally that's where we are moving. There's a lot more work that's happening and work that we are doing around on the SME, on the mid-corporate side, which is how do you enable, supply chain financing, and that's where a lot of the product development effort that we are spending a lot of time and energy on. Third is we continue to, back a lot of fintech. So ideas, actually, innovation is happening only in that area. So that we, as and when the ideas kind of become more, meaningful, we kind of try and see how we can actually broad base that and bring it into our platform capability.
Okay. And how is the structure between you and the banks? Because you deal with so many banks. What kinds of collaborations have you made with the banks? How are the revenue or maybe the transaction arrangements in terms of the remunerations? How do you earn money?
So in the purest, regulatory term, we are a technology service provider to the bank. We are, banks are governed by outsourcing guidelines of RBI. But what we incrementally do is we are able to actually get the demand side of that equation. So every bank has its own unique DNA of that organization. They want to cater to a specific set of customers or a region. So what we do is whenever we have these partnerships, because we are in the middle, we are almost like a marketplace without being a marketplace, where we know that if, let's say, you are a certain type of business or a fintech that is building certain capabilities, you can actually narrow it down to 3 or 4 banks that will actually be a good partner for you to partner with, right? Given that their readiness to sort of partner also. So in that, how do you kind of get to the decision makers in the bank and try and actually get that mandate going? Is where a lot of time. So it's not a pure play technology sale where we just sell them that this is like $1 million or 5 crore rupees, take it and it is your business. We actually try and see how well that business can be run, both at efficiency level in terms of their operations. So we have a lot of back office products which are enabling them to run more efficiently. We had put it out in our LinkedIn and all that. We have done that with someone like an SBI where they've moved in a couple of their products. So the procurement process still continues to be how the bank is doing. So there will still be an RFP and all that, but the value that we deliver would be like substantially different to what the bank is seeking, and therefore we have taken it on ourselves to basically say, let's move the industry forward, right? You can say that we're only getting paid X. You can deliver, whatever is that value for that X, it's okay. Nobody's going to question, but I think unless we actually move the base to a higher level, the overall efficiency is not going to go up, right? So that's been our sort of take on this.
Okay, no, I think that's an interesting one. But specifically on the profitability part, and again, the business part, and again the product. I understand that a lot of banks take a lot of time to onboard the TSPs, right? So in general, your observation, how long does it take for you maybe to engage with a bank, onboard a bank on your platform, and maybe start your business actually going there?
Yeah, I mean, it's it used to take anywhere between 2.5 to 3 years to actually see the money in the bank of doing business. Now is a function of what is the hunger on the bank side at an executive level. But what has changed is that the amount of governance requests that is there today in terms of security audit, governance, the cost of governance in terms of time is way higher now than what it was 5 years ago. Right? So 10 years back, generally speaking, it will take 2 years. Today, if it takes a year, but if I go back in time and look at 10 years back, what this would have taken, it probably is like a 3.5 to 4 year kind of journey. Right? So the net banks have shrunk their speed to taking some of these products to market, but just the cost of compliance has gone up. Therefore, it is actually leading to making sure that you need a third-party auditor to verify and things like that. So that's how I put it, right? But I think 1 year is a good time to actually launch some of these products.
Okay, no, sure. How has the fintech industry changed according to you in the last 10 years? Because the kinds of funds which the fintechs raised in 2020, 2021, it looks like a history today, because if you look at the data of last 3 years, the continuously decline in the funding side. New fintechs are not coming into the market, specifically the young fintechs. And the regulation compliance has become a challenge for a lot of people. So what is your current sense on the current trend specifically that you see in the fintech?
Yeah, I think two counts, right? One is, if you really put it at, we have been on this journey as a country 10, 12 years now. If you really look at the first crop of companies, they all, from an investor community standpoint, must have gone public. So some of them have actually gone ahead and done that. The last one being like MobiKwik, which we discussed just before the conversation. So you are seeing that as that exit optionality comes in, as more and more companies go public, there is going to be more capital that will start believing that yes, this market is able to return the cash that got deployed for a particular segment, right? Although we have progressed significantly, even from both policy making as well as an ecosystem side, on the right direction. But the common narrative on the street in New York, if you go talk to investors, is that, maybe there is something, the regulators are not probably comfortable working with fintech, because that is the signal that they have been getting, or at least the media is actually sort of portrayed in that part of the world to say that. But on ground, you and I know that's not true, right? Like, so to a large extent, I think they have been like very accommodative in how some of these things can go. Obviously, there were some exceptions that kind of overdid some of the regulatory arbitrage that was available. But therefore, there is this whole reset in terms of what kind of ideas can get going. Right? So it's more of a maturity curve that we have gone into. So therefore, a lot of the ideas that normally, let's say neobanking, I'm just using it as an example, very hard to make money in India because the value prop that you will put, consumer neobank I'm talking about, unless you are able to build it to a certain scale and efficiency, the customer will not see that value, right? Like you will probably get a few tens of million customers who probably will sign up for your product because there's some campaign. You made a really fantastic product. But ultimately, the test of that business is it making money, right? So therefore, those model discovery has happened in India in the last 5-7 years, right? Where some ideas will stay, like digital lending have been a phenomenal success. It overshoot and then it corrected because of regulators saying that it cannot run in a certain way. The digital lending guidelines came out. Now it will stabilize and it will kind of start sort of climbing back. So I think the market maturity has come to a point where we know that there are certain ideas that will work. We see a lot of ideas around what I call as systems of intelligence, right? How you can, which basically works closely with the bank to augment how the bank is running. So if I take lending as a use case, you have a set of companies that provide the LMS. You have a set of companies that provide what is called as an LOS. LMS is the loan management system, which is where the ledgering of the loan is kept. Loan origination systems are where you will actually what you see in a front end, where it could be a DSA app, it could be a workflow in a website or whatever. There are companies that provide only that, so they basically can get incentivized for every loan that that somebody originates. Now you have a new crop of fintechs that are coming in saying, I will only help the regulated business underwrite more efficiently. Right. So I think the point solutions, which is something what we call as the systems of intelligence, are we are seeing birth of that a lot more. Primarily because the market is mature now, where you have incumbent players in the first two layers. The third layer is actually giving way for new companies to come in. So it may not have very large outcomes. So you may not have like a $10 billion company doing only underwriting, but we may have maybe 200 companies that are in the size of 50 to 500 million, right? Which is also a very good outcome because our market also doesn't have the depth to basically take 200 unicorns or.
No, I think that is a very fair point. In fact, if you the founder of Ant Financial, Jack Ma, also once said, now we are living in an era where perhaps there won't be many billion-dollar companies, but a lot of million-dollar companies, right? But while this is true, and that's where we have a lot of unicorns and sunicorns and the new companies, the reality is, for whatever reasons, the new fintechs, the young entrepreneurs are not hitting the fintech platform. That's what is the observation that I have in last 1 year or so. What could be the reasons that the new people are not coming to the fintech industry now?
Yeah, like I said, I think I started with this, right? The basic premise is that if I'm working and an operator in an established large corporate, the easy money was very inviting for me to come and test it out at least, right? So the risk of failure was not very high. Now, people are saying, if the risk-reward trade-off is not heavily tilted in the form of reward, why take a chance? So a lot of people who were actually on the fence have kind of pulled back. That is one area. The other is, naturally there is clarity around what could happen and what cannot, which is also leading to investor appetite. If you look at it from investor side, they would have tested a few ideas. Infrastructure, for example, 10 years back when we went to raise capital, we were told that this is not a business model that will fly. Today, India alone has like 20 companies like M2P which have got venture capital backed in the last 5 years, right? So it is also a question of venture not understanding what this means, because in a very large market like us, you could actually build a very large company just focused on one state or one neighborhood, because those are population scale, right? Like if you just serve Mahakumbh today, you are basically serving part of Europe, right?
Yes.
So therefore, the ideas that needs to get the backing for such ideas is not there because there is no proof point. Like we are a great example of that. 10 years back, if somebody had given us money, maybe we would have grown faster, become bigger or whatever, or maybe because of that capital we would have failed and we would not have done the things that we should have done. So that also is a factor, right? Because the investor community understands a certain model in terms of how some ideas can actually become large because they've seen it work elsewhere. So payment gateway, if you take, Stripe has gone in a certain direction. Which are the companies that can potentially become Stripe like for India? That's how that's how they underwrite the check, because it is easier for them to explain that story to their LPs when they raise capital. But it becomes very hard to do that when that such examples now. Interestingly though, you will find a lot of Indian funds which are creating their own fintech arms, right? Which is to say, there's still appetite from an investor community to actually back entrepreneurs who are doing in the fintech space.
Right. Yeah. Just last two quick questions. You're doing so many things. You're there as a mature company now. You have been raising funds. People knows you. How do you position yourself today? I mean, you're still a TSP. You're a fintech company. How do you tell a bank what kind of problem do you solve? So, in general, broadly, how do you position yourself? What problem do you solve?
Yeah, I think there is we don't, we go to a bank CEO and kind of talk about opportunities only. How can I bring the next $100 million in balance sheet for them, or get the next $5 million customers for them? Because that is what will resonate with them. So if I'm going to go and tell them that I will save you, 20% in cost, okay, you can deal with my CFO.
Yes.
Because from a bank CEO in that 3 or 5 year window that they only get measured on three things. Have they been able to move the market cap, which is a function of what the book multiple, has it gone up?
Right.
Have they been able to reduce the cost income ratio? Have they been able to increase the net interest margin? Right, expand the net NIM. Right? These are the only three metrics that. So therefore, if you're not able to go to a banker to basically solve for any one of these three, you are not his priority. Right. So therefore, we always try and see what is the value that the bank will get out of the bargain. Right. Given that there will be like 10 other players, like every segment that we play in, there are at least 10 companies that will be better than us and maybe 5 companies that are worse than us. Yes. Right? So you naturally have to basically look at it as saying, as a thali, this is a pretty good offering. Maybe the sweet could have been better, or the sambar could have been better, right? So if they are only looking for the sweet, then that option always exists for them to sort of go with that as an option.
And then last question, Madhu. What next for you now? Where do you see yourself? The whole fintech sector is now looking at the IPO very, very aggressively, and with a big hope. So how far are you from that?
Yeah, sure.
And what are your future plans specifically? If you look at the market or maybe that, if you look at the next 5 years, where will you be after 5 years?
Yeah, I think the world is changing so fast, so very hard to predict where we will be in 5 years. But I think the common joke on the street is that it's in India, it is easier to go to public markets than raise capital from the private market, right? So the market is very kind right now. Yes, the wave has changed. But I think organizationally we have to get to that maturity in terms of predictability of business. Yes. And getting the house in order with respect to what the public market demands, which is a very different regimen that we need to get into. So it's almost like growing from an adolescent to being an adult. So that is the process that we are currently in. Realistically, we are like 2-3 years away from becoming a candidate which is eligible to be in the public markets. I don't think we are timing it or we're waiting for it to get some revenue, but we genuinely feel that because if you look at it from investor return and giving money back to our investor, we are still very young as a company. Although we are at 11 in the 11th year, we have been backed only by venture capital only for the last 4-5 years. Right. So we still have like a few years before investors start asking questions about when are you going public and all that. So there's no pressure on that front. But we also feel a very large opportunity around taking what we have built in India to the international sort of audience. It's almost like a repeat of what the TCS and the Infosys had done, in the early 90s and 2000. So that is the scope of that tremendous opportunity that is ahead of us. So 5 years out, we would have not done our job if we are like 20x of what we are, in terms of revenue scale and all that. But guess what? On the people side, we may not need to actually grow even like 3 or 4x, right?
Okay.
So then naturally there is value creation happening for our stakeholders, whether it is the public market or private, which is what would be a great outcome from our perspective. As founders, we continue to be excited about what we are doing. So every day we wake up to challenges that we have on the job. While running a business for banks is an extremely hard work because it's 24/7. You're dealing with other people's money, so you can't take eye off the ball. It's sometimes you feel like you're on a treadmill because you have been running and you're out of breath, but you're still standing in the same place.
Absolutely.
Right?
And then lastly, Madhu, I'm done with my questions, but just one quick is on your take on AI. How far AI will go specifically in fintechs?
So AI on fintech. So I think recently Bajaj announced saying they are transitioning from fintech to fin AI.
Yes.
Which is phenomenal. I think every company should actually start thinking, not just fintechs, even incumbent banks should think of saying, what is the AI disruption that's going to come?
Yes.
It is inevitable that AI is going to be, overwhelm us in the short term side. I think we are actually pretty worried in terms of what is the impact that it could cause to business, because not just from our business, but in general, we have seen efficiency go up on engineering, for example. I don't really think of this as cost saving. It's not like I can take 50 people out of the job. But the efficiency goes up by in the order of magnitude 2.5, 3x. The same engineer can actually deliver 3x output, thanks to AI and the tools that are available around AI. Right. It is only going to get better and better and faster. Right? So the businesses that are actually waking up to this will actually really benefit from the tailwinds. And those who don't, it's almost like the Kodak moment. If you feel that, or the Nokia moment, where you feel that this is one more tech wave that we don't have to worry about, it's not the case. Right? It's scary and exciting at the same time.
It is. And I think that was a detailed one, Madhu. In fact, I enjoyed chatting with you.
Thank you so much.
Some relevant answers and realistic answers. Thank you so much for being part of Fintech Diary. And
great to be here. Yeah.
Thank you. And thank you so much for watching Fintech Diary. Stay tuned to etbfsi.com. Thank you.